All right, good afternoon, everybody. I'm David Huff, CPA with DW Huff Consulting, here with the July 28th, 2023 edition of News from the Front Lines of Business. So here we are, helping you build, grow, and enjoy your wealth, as always. Another week in the bag, and we'll bring to you some information from client discussions that we think will be useful to you, and just some other general thoughts. But I guess the first thing that came up this week is the dividend snowball. So I saw a couple, another CPA does some planning, had a YouTube channel. He mentioned it and gave some examples, and that prompted me to have a discussion with somebody when we were talking about investments and why. My thoughts are, when you're first starting out, you want to, I guess, emphasize your dividend payers, right? So we want to always think about how we can generate passive income. So that's my opinion, right? And until I find otherwise, that's kind of the way I'm going to approach it. But so the dividend's going to compound. We know when you look at it over a long period of time, companies are going to make money. They're going to increase their prices. Inflation also is going to drive it. So, but this Albert Einstein quote here, compound interest being the eighth wonder of the world, kind of jumps out at me. And it's true, because as you think about, you might look at a dividend paying stock now, and maybe as you're looking at the figures, you'll see that the yield might be looking like it's 4% or 3%, some low amount of money. But when you look at it over time, how that dollar amount really translates is, I guess, more useful to you, right? So I just pulled an example again. This is, I'm not trying to do any kind of data mining or anything here, but I pulled two dividend-paying stocks going back to 2000. So I just grabbed Home Depot and AT&T. All right, so, and it just as luck would have it, there's two very different stories going on here, right? Home Depot, over the time period has grown by quite a bit more than AT&T. So over this long-term period here, that annualized rate of return is 8.8 if you look over at the far right versus 1.63%. All right, so so the value of the portfolio, two completely different stories there. But below it, we see the portfolio income, and we see the dividends. So these are dividend-paying stocks, and we look at how that grew over time. So in in the year 2000, there we had our AT&T paying a much higher dividend than Home Depot. So that chart's a little bit hard to read, but that first line there is $25 per year on this $1,000 portfolio. So not anything to be excited about there, but as we follow along, so our red line is AT&T and the blue line's Home Depot. So they're going about their business, they're raising their prices and doing whatever. You're still getting your dividend, but despite the, I guess, lackluster performance of the stock, the dividend still keeps growing. So they're still doing good. And even as you get into the latter years here, where the income from the dividends decrease, which is rare. I mean, really, companies are usually, once they start their dividend trend, you find this trend like we see is more common, where it just continues to go up. They've had to take a cut for whatever reason, but still pretty solid money. All right, and then if you look at Home Depot, their dividend started very, very weak, and now it's off the charts, right? At 100 and just a little bit under $175 a year here on that same $1,000 investment. So what I'm trying to getting at is that the dividends are going to grow, and even if something bad happens to the stock, it's still a pretty solid dividend. And you could kind of protect yourself here by not buying any one company. So we try to avoid single stock portfolios, but there are exchange traded funds that will focus on dividends. So the one we like is the ticker symbol is DVY, and there are others. So that's just one that I've used and I like it. That has 100 stocks in it. So the odds of one of them going down really substantially and pulling down a portfolio is really kind of minimized. That risk is minimized. But even so, if you look at the total universe of dividend-paying stocks, this is kind of what you see. The dividend just kind of trends upwards. A couple of individual players may have a bad run of it, but in general, the dividend is going to keep growing and keep compounding. So as you're in that build and that grow phase of your journey, if you're reinvesting dividends, that's what happened here. We reinvested. It's going to grow even more, and then when you eventually get to the point where you have to kind of turn on the dividend faucet, the growth's not going to be as much, but it's still going to continue to grow because that's the way inflation works and prices work, and the way these companies manage it, because they like to keep the dividends intact and keep it growing. So with that, I don't have any more charts to show y'all here, but I do want to share a couple more things that came up that were useful. Second thing being that real estate investing. So we talk about that a lot as we're getting into our grow phase of our journey here, and it's a good way to get some real estate and rent it out. But other people will obtain real estate with the plans of flipping, right? So buying it, holding it, and hopefully selling for a decent profit. And this discussion we had was one client, not very experienced in real estate, but they came into some money and they made an investment. All right, so bought a property for about $150,000, put in another 80 or so thousand bucks in. So all in, they got $230,000 into a property. The sale price ended up being somewhere around $270,000. So we're not counting for taxes or anything else, more or less $40,000 gain, right? But they held that property. It took them a little bit over a year to get this done for $40,000. So my question there is, because they did a lot of the work of the remodeling themselves, they subcontracted out what they could, but they did a lot. Had a lot of time invested in this property. So in that scenario, was that a smart investment? If you spent hundreds of hours working on things with yourself, buying stuff from Home Depot and fixing the property up, hiring out contractors, to make $40,000 after a year of working on the thing, pretty much, pretty regularly, and not like it was a full-time job or anything, but a substantial amount of time went into it. So was that really a good investment, or was this client just a glorified real estate developer, right? So if they know how to do this work, they could probably have gone out and had started a little LLC and done this work with somebody and made $40,000 or more doing the work that they already know how to do for somebody else and not having their capital at risk. So I guess it gets back to everything. Whenever we make an investment, are we getting it for a good enough price so that it's really an investment and not just another job, right? So anybody who's considering real estate, think about that, because if you don't buy it at the right price, you could work your butt off on it and not make any more than you would work another part-time job somewhere. So that's, I think, in this example here, $40,000 for a year worth of work and having the capital investment tied up in it, that rate of return, in my opinion, is not sufficient, and I would consider something else. And that's what I told them. All right. So another conversation we had was related to a small business and a way to reimburse the owners for expenses. So a lot of times we think about our S corps, which it's our most common business type, and when you're running an S corp, even you as being the owner, you're still considered to be an employee of that S corp. So a lot of times some expenses would not be deducted because you may have paid some personal expenses. You may have worked in your office out of your home, and there's all kinds of things you may have paid out of pocket for as an employee. You don't get the benefit because the way the itemized deductions are now, those miscellaneous deductions don't do you any good anymore as an employee. However, there is a way to set up what they call an accountable plan. So if you establish a plan that kind of spells out what type of expenses the business will reimburse employees for, so it could be automobiles, it could be meals with clients, it could be for some office use of their home, put it in writing, make an accountable plan, and make a reimbursement for that expense. That's a way that the business can realize a deduction for it. The owner can get a little bit more money out of their business. Theoretically, I guess it's kind of tax-free. I mean, because in that example, you're reimbursing an expense, so it's different from like a salary type example or something else where a dividend or something else where you'd be pulling something out of a company and possibly having a tax effect. But that's reimbursement expense, no tax effect on the recipient. So if you need ideas on how to set that up, let us know. I think we have a few things on the blog section about it. But accountable plan is how you accomplish that. So that is all I can talk about this week. My closing thought: karma. Think good thoughts, say nice things, do good for others. Everything comes back to you. That's definitely been my experience. I don't know why this particular story just popped in my head as I was recording this. I remember the time, a long time ago, pre-Katrina, did some work for somebody, helped them out. Wasn't a very high paid person, so couldn't really afford my fees, but because he was a friend of a friend of a friend, I kind of did it and gave him a bill and never saw any money on it. So I kind of wrote it off to experience or whatever, went about my way. But about 3 years after that work was done, as luck would have it, I'm having a rough week. Things are just tight money-wise, and just frustrated. Cars running low on gas, of all things. And now I'm at the gas station, spending, wiping out what's left of my checking account balance, putting gas in my tank, and sitting there, not in a great mood. Sitting there pumping gas. Guy runs out of the gas station. I recognize this guy from years ago. Hands me $300 in cash. So, man, I've been waiting to get a hold of you to pay you for that work you did a while back. I won some money at the track, and now I'm making good on my bill, and I appreciate everything you did for me. And here you go, thanks. So anyway, help people out. It comes back to you. So that was a funny story, and hopefully you have some experiences like that yourself. So with that, get out in the world and do something fun and build, grow, and enjoy your wealth. And we'll see you out here next week.